So, as we all know from the videos that I have showed you and that you have hopefully watched on my YouTube channel, you will know that we don't trade with indicators or anything like that. We draw our own indicators on the chart. And let's just start off by following the order flow here on EU. So as we can see that price rallied from this order block at the bottom over here. It rallied up and then created another order block over here. You can see that I'm just going to highlight my mouse so you can follow it. So you can see that even though this is a bearish candle over here, it took 2 candles to create the order block, but you'll notice that there's 2 order blocks over here. So in a case like this, we just mark it up as one whole order block so we don't confuse ourselves. So there is one large order block over there, and you'll see price making more order blocks when there is one large order block like this. So following the institutional order flow, we are basically just following price up. If you don't know how to mark up the order blocks, then I suggest you go and watch that video that I have created on my YouTube channel. So you can see then price rallying up from these order blocks, and then when there's a small retracement, they come in to test the order block again. Notice also that there is actually a fair value gap over here which has not been closed. So there is our fair value gap. So we can at some point expect price to come in and possibly have some sort of reaction off that level. We can see that there's another small fair value gap here that was closed halfway. So there is still some of that gap left to close. So it's not a large fair value gap, but it is mindful to know if you are in a trade near that point, you can use that as a take profit area, because we know that price is drawn like a magnet to those price areas. And if we look, this would be our institutional level of around 200. So price, you can expect some reaction having a fair value gap and a institutional level of 200 over here, exactly 200. So over there, and so we're following the order flow up, and when price bounced off of these order blocks, they obviously like to test the order blocks. No order block has been broken over here. So again, we're just following the order flow up over here, and more order blocks are being created as price goes up. And again, another order block found over here in this section. Price rallied up, retraced back down, and if we look, this is our round number figure over here. So price broke through our round number, retested the round number figure, created another order block on the way up. So we have 2 order blocks over here inside of each other, and price rallied up. Okay, so when price rallied up, where did it rally into? Well, it's quite simple. This is a institutional price level, and you can notice that by when this order block here passing our large round number, price rallied up. Sorry, there we go. There is our round number. Price rallied up, created 2 order blocks over here, and rallied up into our 500 institutional price level over there, 13,500. So when price rallied up, you will notice that it also created a fair value gap over here. So when price created this fair value gap, we had a rejection of the price at the 500 level, and price came in to fill that fair value gap. So price was imbalanced over here on this candle, and basically price rebalanced itself, and you can see that another order block was created over here. So this was our order block that took us up past the 500 institutional level, our 13,500 institutional level. When price rallied up, we created another order block over here. So that is our order block that took us to reject the high of the institutional level of 200. So this is our 14,200 institutional level. So you can see a major rejection over there of the price at the 200 institutional level, and price basically accumulated or consolidated, compressed, sideways movement before dropping down. So price was holding between the 14,200 and the 13,500 level. When price broke that level, this order block, this bullish order block, now becomes our breaker. Why? Well, that's simple, because this candle on the 4-hour chart closed this order block and created a breaker. So now we have a breaker and not only an order block. So we can see at the top over here, now that we have our breaker, we'll also see that inside at the top, we have bearish order block, another bearish order block, another bearish order block, another bearish order block. So encapsulating this whole area is about 4 bearish order blocks on the 4-hour time frame. We have a breaker created. Price rallied and bounced off of this order block over here. You can see price coming down, creating our breaker, testing this order block, bouncing back up, retesting our breaker. Price rejected our 500 institutional level. And if you look close over here, we will see that there is also a fair value gap that was closed over here. I'm just going to make this fair value gap purple. So this fair value gap over here was not completely closed, but you can see when price rallied down over here, it created imbalance. And when price retraced back up, this fair value gap was closed. So there's only a really small fair value gap over here that has not been taken out by the institutions. So small fair value gap, and then price basically fell off and actually closed again below this order block. So this candle closed below this order block also. So when the market opens on Monday, we can either expect a buyback, a retracement, up to close this fair value gap over here. There's another fair value gap over here. This is a fair value gap, and we can expect price, because EU likes to balance itself up. So when the market opens, we can expect this fair value gap to close and then further action to the downside. If the market makers decide that this balance in price is not enough, they perhaps will like to take out this fair value gap, and then we will see a downward move. Also testing this 4-hour order block at the top here. So these order blocks all intersect with each other, making this large, strong order block over here. And you can see that when price comes in there, we've got our institutional 500 level. We've got a fair value gap to close. We can have our breaker over here. And obviously, we also have our source candle. Make that blue. So here is our source candle. So price can come into this zone here, but we are looking to sell when price comes into this zone. You can buy up into the zone and then sell down from the zone. So price can even retest our source as long as we are respecting our 14,200 institutional level. Because remember, there is liquidity at the top here. And if the institutions decide that they want to raid that liquidity, meaning a stop hunt, they will raise price, wick into that, and then push price down. But the candle closes must stay within our source to remain in a bearish move. So this is how we trade price action, and we can only trade what we see on the chart. We don't just predict and think what's going to happen. We know what's going to happen based on the price action. So EU likes to balance itself. We can basically bank on the fact that they would likely close at least this gap before going lower. Why is that? Well, it's simple, because if institutions are selling down from this level, the other institutions, banks, hedge funds, will also want to get in on the action, also want to get in on the sell, but they don't want to sell at current market price of 12,550. So what they will do is they will use some of the equity, their large equity accounts, to push price back up into a premium level and then sell it down. So they will never just sell at current market price. Price will retrace first and then sell off. So don't be fooled to think it's a complete buy swing and price is going to go completely higher. They will push price up into a zone where they prefer to sell from, and then the sell off will happen. And you can see this happen over and over again. They are selling and then they are buying to sell, buying to sell, buying to sell. And this happens repeatedly on any pair. Okay, so again, when the market opens on this new week, we can expect to see a retracement either up into our fair value gap over here, our top fair value gap, and close that fair value gap testing this order block, or we can just expect the movement directly from when this fair value gap over here is closed. And if we look over here, this would be our round number figure. So there would be a large amount of orders placed that they would want to protect. So even if the candles wick into our fair value gap, price will come down and push below this area to target these other points of liquidity. Okay, so what do I mean by points of liquidity? So basically, each time someone is buying, there is stop losses. So these stop losses are sitting at these levels, and banks will come and raid those stop losses. And that is how liquidity is created in the market. Retail traders, institutions, all buying, and their positions will either have to be closed, and this is the movement of the market. So this area will be raided, and we can even see a potential bounce off our fair value, but in end, we want to see a movement at least into our fair value gap over here. Okay, so that is my view on EU. We are expecting price to test either our breaker, close that fair value gap, or that order block, but our source, our blue box over here, must be respected for it to remain a valid sell. So expect a retracement and then a sell-off on Monday. Okay, I'm just going to go swap over to GU because others like to trade GU as well. And GU and EU move very similarly together. So we can basically start off the same. I'm just going to do this very quickly because it is the same as EU. So if we follow our order flow, we can just put our order blocks in place over here. So when price rallied up from this order block, price retraced. Where did it retrace from? This is a round number institutional level of 1.26. And you can see price rejected, bounced off of our order block. And when it bounced off of our order block, a little bit of rejection, but another order block over here was created, pushing price up again. And when price rallied up, we can see over here, here is our next institutional level of 800. And another order block over here was created. Okay. Small order block nonetheless. So when price rallied up, tested our order block, rallied up again. Where did price rally to? 500 institutional level. This happens over and over. You guys need to understand how important the institutional price levels are. I'll do an advanced video on the institutional price level and how the banks work with those levels and the whole thinking behind it and the thought process. Okay, so price rallied up, price rallied down, and you can see that this order block was actually violated on this area here. So people that follow my strategy will be expecting a sell area, but we need to remember that there is two types of order blocks: a strong order block, which is responsible for a large move to the upside, and a weak order block like this one over here, responsible for a move up, but not as a substantial move up like this one below. So this is a strong order block. This is a weak order block. Price pushed up, rejected back down, closed below it, rallied back up, and you can see, where did it rally into? This is a round number, 1.28 level. Price rejected. Okay, where did it reject? Well, here is the last order block that was responsible for the move upwards. Price rejected, and when price closed below this order block, because it is a decent order block, we can see 12 hours of movement to the upside, and where this one you could only see about 8 hours, but you can see rejection at those levels. So this order block now becomes our breaker. And we also have our source candle, which is that one over there, responsible for the peak formation high. So now we have our source, we have our breaker, and when price broke that level, this candle over here was responsible for creating this as our breaker. Price rallied up, tested our breaker, and if we look closer, we will see that there is also a fair value gap over here that was closed about 50% of that fair value gap. So there's about 50%, and there's another 50% of that fair value gap to be closed at a later point in time when price comes near to those levels. Okay, so now because we have a breaker created, our order flow has changed to bearish on GU. So here is our bearish order block. So price rallied down, tested our order block. Notice I always tell you that entries at the opening candle of the order block are good entries, and also the 50% level. Didn't quite get to the 50% level, but it did get to the open of our order block right there. And if you had entered on there, you would have been taken in nicely on a sell limit. And you can see price also 1.26800 institutional level right there, order block. So that is a powerful signal to us that the move to the downside will be strong, because we have our breaker and we have a bearish order block. Price pushed. Okay, so where did price push into before it retraced? 500 institutional level. Right there, bounced off of our 500 institutional level, boom, straight up, testing just the bottom of our order block over here, just like that. You can see that over here is our institutional level of 500. So there's our institutional level of 500. Price rate off this 500 institutional level, wicked into our order block that is bearish, and price fell down. Notice also that when it wicked up, there was another small fair value gap that was closed over here. So there was a small fair value gap imbalance in price, and this closed that imbalance, and also this imbalance in price over here. There was an imbalance in price, and this retracement back up closed that imbalance in price. So those are no longer fair value gaps, but now we have another fair value gap between our round number of 1.26 and our 25,500 institutional level. So the same for GU. We can expect a retracement when the London session opens on Monday morning, and we can expect price to retest our fair value gap institutional level before it continues the order flow, which is bearish. So we can expect even a retracement to close and retest our breaker, because price likes to retest and take the institutions a second opportunity to get in on the trade. And then we can see the move to the downside because we have points of interest for price to come to. So here is a fair value gap over here. And if we look at price on a higher level, we can see that there is also a fair value gap at the bottom over here that price has not tested. And on the daily chart, an even bigger fair value gap that has not closed would be over here. So there is a fair value gap that price can potentially go to because there is imbalance. And when price bounced off of our 1.28 institutional level, you will see over there that all of this fair value gap was closed right there. So that was a big fair value gap on the daily chart, and this was taken as part of that imbalance in price. Notice also over here that there is a point of liquidity over there because that is equal highs, and stops are sitting there, retail stop losses, and institutions will come up to raid this area to give themselves liquidity and then sell. So that is the kind of movement we are seeing over here. And on the daily time frame, this was the last order block, bullish order block, that was our breaker for the daily chart. So my strategy I teach also includes the daily chart, and you can see there that that is the last bullish order block that was the breaker, and then price came down, and also not only closing our fair value gap but also our breaker on the daily chart right over there. Closed the fair value gap, tested our breaker, price rallied down, respected our institutional level of 1.28, and on the 4 hour, we can see that there is actually now a bearish order block sitting at the top inside of our source next to our breaker. So it gives us additional confirmation that price can come to this area, retest it, and then go down. So that is the kind of movement we can expect from GU come Monday morning. It can either come to our source breaker and order block and retest, or just come in to close our fair value gaps over here. And again, another fair value gap, price rallied up, and then we can expect a movement into at least this fair value gap before we see some reaction. We can also see a reaction happen like this, where the market can gap down and then close our fair value gaps to go down like that. Okay, so this will be the conclusion of this part of the video. I'm going to make another Zoom call where I will take any questions based on the Zoom giving us only 40 minutes. So I'm going to send you another link in the chat, and then we can join again if anyone has any questions. There was a lot of questions on the chat group, but not so many now all of a sudden. So give me 2 minutes and I will resend the link for the next Zoom call. Thanks for watching.
Hey Darren, can you hear me?